Hey everybody, today I want to cover a subject that I don't think gets enough attention, which is basically that all of trading is a trade-off. And it's really a trade-off between your size and your potential profit. The bigger your profit aim, the smaller your chance of success. The smaller you trade, the easier your chance of success becomes. It's kind of like driving a car. If you're driving a small little car at 5 miles an hour, your chance of an accident is relatively minuscule. Even if you bump something, it's not going to hurt you badly. But if you're driving a Bugatti at 200 miles an hour, even the tiniest of pebbles is going to upend you and basically put you in a hospital. And that's effectively how trading is. The bigger you go, the bigger risk you take, the less chance of a success you have. So this particular trade-off really means that you actually have to have patience. That's the irony of the whole thing, is that regardless of whether you trade small or try to go for large, big profits, you still have to have patience, but very different kind of patience in this trade-off scenario. Because if you are going for really large, big profits, you have to have the patience of a sniper. You have to wait and wait and wait until the opportunity is just so obvious, so ripe, that you can take it at large size and commit to your trade. On the other hand, if you're trading with very small size, you have to have the patience of tiny, tiny, tiny little steps. Let me show you what that means in actual trading dollars. I'm trading this Surge Prompt account right now. And as you can see, I am, of course, the latter. I believe in taking tiny, tiny little steps and having the absolute highest chance of success in winning my funding for Surge. As a result, my trades are incredibly tiny. Look at this account. I have 848 trade cycles, each one of them between $10 and $25 resolution. It's going to take me a long time to reach my goal. But the flip side of that is that I will have an incredibly high confidence level, an incredibly high degree of success to reach my goal. In fact, statistically, I have a 99% chance of reaching my goal, but it's going to take me forever. And now I'm going to turn you over to part of our live trading session last week. It kind of talks a little bit about some of the other trade-offs that I think are really important to take a look at trading. I wish you guys the best of luck, the best of trading, and I'll see you guys in the market. Boris Schlossberg, over and out. Is there any news here? Oh, ooh. So that's a dovish. That's why the market spiked, because they're just spanking Bullard. Bullard came out yesterday saying he wants to do like a triple rate hike, blah, blah, blah. He's a fucking idiot anyways. And clearly Powell was really not happy. And because the Fed just doesn't want to spike, really raise rates. That's super, super bullish for stocks. That's why stocks just basically took off. This one, gold is also taking off, by the way. Gold is really taking off hard now to the upside as a result of this. So that's what's going on. So, you know, we're getting now, you know, we're waiting for this wave of buying to exhaust itself a little bit. And there's another good reason why we didn't jump into the Dow trade. Although, you know, Miguel, you made money, so you resolved that trade on level one, so it was fine. But generally, that's the reason why I try to reserve my my ammunition as much as possible. But yeah, I mean, like you could see, you could trade this on momentum as well, right? If you wanted to trade the green candles on the upper end of the range and just take the buys, if you want to take every time there's a green candle, you want to just take the buys to the highs, sells to the lows. You could trade it that way too. It's totally feasible. And it doesn't get done on the first one. It may get done on the second one. It may get done on the third one. Your chance of resolution is probably just as strong on the momentum side as it is on mean reversion, because especially if you're on the right side of the move, that is, you're in the upper end of the range, right? And it's moving. It's not moving from the highs to the to the lower end, but it's moving from the lows to the uppers. You see what I'm saying, guys? So you could run the strategy a million different ways, and make it totally viable. All right, now we just have to be very patient. The Bullard spike is still making its way felt through the market. Nas just lifted 100 points in 2 minutes on those remarks. So it may take a while for the profit taking to kick in. We'll be very, very patient. Dow holding bid a little bit better than Nas. Okay, in trade level 2. There's a tiny, tiny little red candle, but as you can see, the algo caught it. So now we're in trade level 2. 72 is my TP. Take profit is 72. So we'll see. We'll see where we can go. It could spike me right back out because it's still very volatile post news events. So we'll be patient in our trading. Oops, I get spiked out to from level 2. I'm going to go to level 3 now. That was a tough trade because there was a clear turn trade. We just got caught by a bad tick, and so now we're gonna have to stay in the trade for longer. Which that's why we give ourselves lots and lots of chances on small size. So I'm actually I think that's the best way to explain the trade-off. I'm struggling to try to figure out how to explain it to you guys, but I think everybody understands this in the simplest form. The smaller you trade, the more chances you have to win. The larger you trade, the bigger your profits are. The smaller you trade, the more chances you have to win. With the smaller your profits are, the larger you trade, the bigger your profits are, the less chances you have to win. It's basically, that's what it comes down to. Does that make sense to everybody? And sometimes the market structure just doesn't cooperate, and there's nothing you can do about it. So an important point that I wanted to make is we hit the highs. This would have been a profitable trade, right? But we just did not get the market structure that we're looking for. Now you could say, well, you could have traded this market structure, you could have traded that market structure. Yeah, coulda, woulda, shoulda. It's not that it wouldn't have been successful in this case. It's just that in all other cases, this market structure is a better signal. And the trade-off here is sometimes you're not going to get the profit trade right away, but on a longer term basis, generally this is going to be a better signal than this, because lots of times this signal is a false signal and it generates an unnecessary stop. So there's always a trade-off. There's never a perfect solution. All you're trying to do is find the best possible solution, given the lay of the land, given how the thing works generally, not specifically, because specifically there's always an exception. And new traders always fall for this desire to adjust to the exception, to adjust to the one difference that they see today that would have been profitable if they actually did it, without realizing that that's just this one single example of it, and there's 100 counter examples that they're not seeing or they're not doing. And that's in many ways, I think the difference between trading around for a long time versus trading around for a short time is that every time you see an exception, you think, oh, I found a solution, when in fact you've just found a trap. Okay, second red candle possibly showing up. Here we go. Are we in? Yeah, we're in. So that's level 3 on the Dow. looking for 59 on that one. Let's see if we can, let's see if we get any down profit taking momentum on this. That's my stop, 89. This is tough. I mean, it's going to churn me out today. It's a lot of volatility, and the profit taking is very shallow. So I'm going to get tagged out. I get tagged out. Now I go to level 4. But again, remember, I have capacity all the way up to level 9 on my sizing. So I'm not even halfway through my journey here, and I'm still, I'm stalled at the top here. I'm stalled at the top, which means that it's likely that the shorts are going to get broken somewhere down the road. Somewhere down the road they're going to get broken. Now, the one thing that's really great about the algo that you appreciate is that it doesn't rush your entries. When I'm trading manual, I'm always anticipating, I'm always rushing, I'm always, I'm always generating false entries as a result of it. Whereas the algo just is super patient. It just, stays in the trade. So now we're level 4, excuse me, level 4 in the trade. 57 is my target. Is that done? And I'm done. And so you see how patience, and obviously there's just now a lot more. As I said to you, they're going to crack it. And they cracked it, right?